still a pretty big down day.
The worst that we've seen, well, since June overall. This has been some of the most painful sell-off that we've seen since June the 11th for the S&P 500, when we saw a 5.9% raise in its market capitalization. But today has been quite phenomenal in some of the big moves. As we've been saying, it's been Apple, Facebook, Amazon taking us lower. Apple lost $180 billion worth in its market capitalization, Taylor. That's equivalent to an entire Cisco wiped out, an entire McDonald's wiped out. In fact, an entire market cap of the entirety of Bitcoin out there.
Yeah, well, and you're getting huge signals cross-asset class. You notice the VIX, instead of spiking up 9 points, is only up 7 points. A 30-year yield, which was down 3, 4, 5 basis points earlier, only down now about 2 basis points on the day. Dollar yen, a classic safe haven trade, along with the Bloomberg dollar index, not moving much more than 0.1%. Yeah. And so those, I think, Romaine, as you know, those cross-asset signals that perhaps aren't giving us the type of I don't know, nervousness, if you will. And
it's good you bring that up too, because there's also a signal baked into some of the individual movers today. The correlations did drop, so a lot of what we saw in this sell-off, it was less a sort of a broad systemic sell-off and more about the individual names. And you did see a lot of individual names rise today, guys.
Yeah, the carnivals.
Carnival Cruise was up 5%, Five Below. You had actually a lot of apparel makers, a lot of energy companies. So there's a sense here that while a lot did get sold off, there was money still seeking a home within the equity market.
Yeah, let me bring in our guest, Diane Jaffe, of course, who's still with us, Senior Portfolio Manager at TCW. Diane, what do you make of a day like this? And Romaine is right. Carnival Cruise Lines, Norwegian, those are some of the best performers in the S&P 500. So there still is a sense of optimism, perhaps, around the reopening trade, if you will, and cross-asset. You're not getting the certain signals, at least in March, that we were getting about the type of nervousness going on.
I agree. The reopening trade is clear and present here in today's movers. Ralph Lauren, as you said, Carnival, Royal Caribbean, and some of the energy stocks. And we saw the CEO of Baker buy 1 million shares in the open market just the other day. So I think that that's the virus, of course, is the gating factor. There's a huge amount of liquidity. There's a huge amount of money on the sidelines in terms of the money market funds. And if there is a vaccine or somehow back to school, definitely has its ups and downs, but makes our way through, that's what you're seeing in the market today. I think the other surprise, in terms of politics, is you saw that the Justice Department is planning to file antitrust charges against Google. And that, I think it was a risk maybe for both Democrats and Republicans. Whoever leads the way in November, will they start poking at some of these big giants and say, hey, you're just too big right now.
And of course, antitrust is one of the key concerns when it comes to the large tech names that have performed so well over the last few weeks and months. Tomorrow, of course, Diane, we get key economic data. We get non-farm payrolls. I'm interested in what sets us up for tomorrow. How would you galvanize yourself looking towards tomorrow's moves in the markets and as you digest these sorts of numbers?
I think that given the unemployment claims stabilizing at around the million level, that we could potentially dip below 10% unemployment tomorrow. And while that's still too high and very painful for huge segments of the economy, I think that earmarks, a trend change of, things continuing to get better.